What's up, guys? It's that time again. It's time to give you guys an update on my game-winning stock portfolio. I'm looking good right now. Let's check it out. Welcome to Piece of the Pie with Ty. I'm Ty, and I appreciate you guys coming to check my channel out. If you're new, make sure you like, subscribe, and hit that notification bell. And if you've been here before, I appreciate you coming back to check me out. Please make sure you hit that like button. All right, so today we're looking at my game-winning stock portfolio. But before we get into my portfolio, let's check out cryptos real quick. What a week for Bitcoin. Bitcoin was killing the game this week. Bitcoin jumped up to all the way to 66,900 a Bitcoin. Oh man. So I know everybody love to watch that go up, but of course it dropped right back down, but I'm pretty sure it's gonna keep running it up. So right now it's down, so if you want to get in on a couple more shares, go ahead and get in. It might continue to drop a little more, but I still think Bitcoin is gonna go the distance. And I keep saying this because Plan B predicted that Bitcoin would go to 100,000 a Bitcoin this year. 100,000 a Bitcoin, and right now it's currently at 60, so it has a ways to go, but I definitely think it could do it. And I did a video on Bitcoin way back, check it out, and I was talking about this same thing, how this year Bitcoin may go to 100,000 a Bitcoin. So I'm still in Bitcoin. I don't hold my Bitcoin on Robinhood, as you guys know, but I did start with Robinhood. So just for references, you can kind of see my average cost on Bitcoin right here, 16,000 a coin. And you guys see where it's at. That was my average before I sold it, and I had a decent amount. So my total return on Bitcoin, again, I just left a dollar, I think $1 in here because Robinhood was stripping when I took it out, and I moved it to BlockFi. Make sure you check out BlockFi if you haven't checked it out already. It's not as nifty with the charts and everything as Robinhood or Coinbase, but it serves its purpose. And yeah, so you guys see I had a 261 return on my investment in Bitcoin because that dollar is still in there. So you already know what my cryptocurrency looked like, you know. And it was the same thing with Ethereum. Ethereum and Bitcoin, they always move together. Ethereum jumped past that 4,000 mark. It was, let's see if I can get it on it, 4,169 was around the high. And yeah, that looked good too. So let's go down here on my Ethereum. You can see on Ethereum, I had the same type of growth, 251%. And again, I left a little bit in there because when I tried to sell out of my Ethereum and Bitcoin on Robinhood, it did something funny. Like it wouldn't let me just take everything out. Or maybe I did it wrong. Maybe it was human error. But anyway, that lets you guys know what I'm looking like on my Ethereum. I'm not gonna show my BlockFi on this. I might not show it anymore, you know, but I definitely am invested into these two cryptocurrencies, Bitcoin and Ethereum. All right, and they've been having a great run. Some predict Ethereum to go to 10,000 in Ether this year. Now, I haven't really looked into that theory or don't know what they are basing it off of, but I'm with it. If Ethereum goes up like that and Bitcoin goes up like that, man, I'm good. And make sure you guys are on these cryptocurrencies because cryptocurrency is the new wave of the future. And if you guys aren't invested into any cryptocurrencies while they're still low, and cryptocurrency does become the new phase or the new wave of currency that everyone is demanded, or that everyone is going to have to use, and you got left behind, you're going to miss the most explosive part of the crypto investments. We already missed when Bitcoin was, under $10 or under $100. I don't know if it was ever under $10 long, but under $100, we missed that part. But we're here now, and we see the wave, and we see a whole lot more people adopting Bitcoin. So the other cryptocurrencies, I'm not a financial advisor. I can't really advise you if those are good or not. I just know I go with Bitcoin because it is the original cryptocurrency, and I feel like it's the one that it definitely has the most market cap, and it's been around the longest. So I just roll with Bitcoin. And Bitcoin is, you can't really control Bitcoin because it's already a set amount of Bitcoin out there. No one can go and edit Bitcoin. And again, I talk about all of this in my video I did about Bitcoin. So that's why I'm really backing Bitcoin, because you can't really alter it, or you can't really, manipulate Bitcoin. So that's why I like Bitcoin, and it's trying to become, the universal currency. But I like Bitcoin because you can't manipulate it. If the government, and I see China trying to come out with their own cryptocurrency, the government going to try to come out with their own cryptocurrency, but it'd be just the same as the dollar. They can control the dollar. They can print more dollars. They can completely control inflation and, everything, because all they gotta do is just create more money. You can't just create more Bitcoin out of thin air. So that's why I really like Bitcoin. But yeah, that's my spill on cryptocurrency. But make sure that if you're not into cryptocurrency, you at least look it up, even if you don't feel like cryptocurrency is the smartest investment, just do some research on it, and just don't get left behind. That's all I can say, because I can't fault anyone that doesn't invest in something they don't understand or believe in. I don't recommend anyone investing into anything that they don't believe in, but I can say it's something special going on with cryptocurrency. And if you're not in the know with it, you're going to miss a great opportunity, because Bitcoin and Ethereum, they have grown more than any stock or position I hold in my portfolio. And that says a lot. So those big name companies and all the companies I have, nothing in my portfolio has grown like Bitcoin and Ethereum for me. All right. So now let's get back to my game winning portfolio. All right, guys, I'm on my game winning stock portfolio. And I told you guys I was going to start doing it like this. And I do think a lot of people are on the mobile devices. Let me know in the comments below what you guys think about this style of video, because me just looking at my video right now, I know you can follow it a lot better than you could on the computer, because the numbers are big, and I'm on the phone, and the phone is pretty bright and big. So I think I like this style, and I would like to fade out, where I could just talk about the numbers and talk about the stocks on the phone and not really show my face, because oh man. But yeah, so it just would be easier. Somebody told me one time that I messed up when I started my YouTube channel, because I showed my face when you don't need to show your face. On YouTube, you don't need to be the face of your brand or anything like that. And I have seen a lot of channels that make a lot of stock videos, and the person never gets on screen. So I'm trying to see which one you guys are liking a little better. But I can give you the straight information and without all the, see me at a computer and stuff. But I enjoy that too, to give my tips. But when we talk about stocks, it might just be better to You know, just go right into the numbers like this. But let me know what you guys think about that in the comments, because I do listen to my audience, you know, because you guys are what makes my channel pop. You guys sticking with me and watching my channel. All right, so let's get into this. All right, so my game winning portfolio, we're looking at it right now, and let me get my notes from last time. So last time, first off, we're going to talk about my annual dividend income. My annual dividend income on my last game winning portfolio. If you haven't checked that out, make sure you go check it out. I had an annual income of $316. As you guys can see, is going up. I'm at $333 because I've bought a few more dividend companies. And yeah, the market's been good. The market's been good for me. I'm not sure about anybody else. And then my portfolio value has increased also. Last video, I was at $17,412. Now I'm at $18,579. So I've been doing good. Hey man, somebody go find Robert Kiyosaki. Somebody go find him, because he claimed that October was going to be the worst month for the stock market. The biggest stock market crash ever was going to happen in October. Bruh, I'm doing pretty good for the biggest crash to be happening, right? So we're going to see how October play out. And I wasn't really concerned about my portfolio, but I wanted some sales, man. I wanted to jump on the deals and sales that the stocks were going to have. But right now I'm buying stocks at regular price. I thought I was going to, need to save up some money on the side so I can just scoop up some cheap stocks. Man, it hasn't happened yet. So yeah, Robert, I'm about to put Robert Kiyosaki in the category with Warren Buffett after a while, because those guys, I don't know what you guys think, but those guys, I feel like they're so high up, and I honestly just be thinking that they call a market decline or tell you what they're doing because they have some alternative motive behind the scene, if you know what I mean. Because Warren Buffett, biggest stock market crash in the world is going to happen. Make sure you don't be in the stock market this year. That's what he was harping, right? But man, this year and last year, but man, if you weren't in the stock market and you didn't buy those dips, man, you missed out. And then you missed out because somebody was saying the market was going to decline and you didn't pick up some of the stocks that were on sale. Man, that person just sabotaged you. I bet they bought some. But so that's why I kind of think about some of the higher up. So I don't really pay attention to what others say, but so much. Of course, I got to talk about it because this is a YouTube channel about stocks, and I'm going to make sure I let you guys know what information is out there, what people are saying. But I do believe you should make sure you don't react too severely to anything anybody calls in the market. Just go with your investing plan. But annual dividend income has increased. My portfolio value has increased. And so my return on my portfolio is now 21.48%. And last video I was at 19.02%. And I'm knocking it out the park. My goal for my portfolio for this year, man, when I include my crypto and my stocks, I severely underestimated my performance and my skills. I severely did, and I only did that because I'm not a professional. I've only been trading in the stock market or investing in the stock market for about like 2 years, but I've been making some very good decisions. So we're on Dividend Watch. If you haven't checked Dividend Watch out, make sure you check it out. Dividend Watch is an all-in-one tool for dividend investors. They allow you to check out the best dividend stocks. They give you dividend ideas. You can track your portfolio, and their dividend calculator is pretty dope. They let you know about dividend aristocrats, blue chip stocks, high yield for their premium, and they give you the best stocks. So a lot of places give you stocks A lot of people talk about stocks. Even like I said before on my channel, there's so many avenues to learn about the best stocks. And Dividend Watch will give you some pretty decent ideas, some pretty solid ideas. Dividend zombies, dividend kings, high yield, high growth stock companies. And you can track your portfolio and all of that. But Dividend Watch is definitely a great tool. Dividend Watch is pretty cheap. 1 year membership with Dividend Watch is $64 per year. And the reason they're pretty cheap, Dividend Watch is a company and it just hit 10,000 users. So it's a new company, it's an independent tool, and they are really making headway. They're always making countless updates to this, and that $64 is well worth it. And I'm already, a member of it. But if you guys want to, you can also join Dividend Watch and use my promo code TY15 to get 15% off of your first year's membership with Dividend Watch. So make sure you check that out. And one of the other new features, like I said, Dividend Watch has added, if you are one of the paid members, you can make multiple portfolios. I'm gonna probably eventually put my retirement portfolio up here. I have a few portfolios. This is just one of them, but I might track my retirement portfolio on this and a couple of the other portfolios I have. But you can add multiple portfolios. At first you only can add one, but now you can add multiple portfolios, multiple watch lists. So Dividend Watch is really, really stepping up its game. And I do think that $64 is eventually going to go up too, because a lot of the other dividend trackers and portfolio trackers are pretty steep. Like Simply Safe Dividends charge like $3.99 a year for doing the same thing that Dividend Watch does. But that's just when you get big names, you can charge that. And people think they're Simply Safe with their dividends. No shade to Simply Safe Dividends, no shade at all. But it's just, like I said, they are pretty expensive compared to Dividend Watch. So I use Dividend Watch because I'm not trying to pay that expensive price. But let's get back to the portfolio. Alright, and as you guys see, I've had steady growth. So that's why I tell y'all, long-term investing is a pretty steady battle. A lot of people who don't like long-term investing because it takes a while. I ain't got nothing but time. And I have never in my life had this type of investing mindset and this type of investing portfolio, period. I just started in the stock market like 2 years ago. So I'm good. So when you go to calendars, you can see your up and coming dividend payouts, what's coming up. My dividend payout for October. I got a few dividends coming to me. SPHD, Dan Restaurants, Lowe's, few things coming. But let's look at this diversification. All right, we haven't been looking at this as much. So I'm going to show you guys how I'm diversified in my portfolio. Because diversification is key. That's what everybody always say, right? How are you diversified? A lot of portfolios like to be very top. Sorry about that. They like to be very tech oriented. The tech usually run their portfolio. Mine is a little different because I'm into consumer services, and when we look at consumer services, it's my REITs. I got ACER. I got ACRE, Acre. I call them Acre, which is a REIT. ADT, BAM, which is Brookfield Financial. I have Dividend Restaurants. I'm surprised that's there. Consumer, well, I guess it is consumer services. EPRT, which is another REIT. Lowe's, which is a building, which is dealing with the housing market and anything construction wise. They're a warehouse. And then Omega Healthcare, that's another REIT. So all my REITs, I love REITs. I love REITs for my dividends. I'm heavily involved in REITs. And so consumer services is my biggest sector. Most people have tech. Tech is next. I'm right behind it on tech. Most of the time it's technology that's the biggest sector. So we're going to look at my tech companies. I have Apple, AMD, AYX, which is a data company, CRSR, which is Corsair Gaming, and Corsair Gaming is one of those companies that doesn't pay a dividend, but it has major growth potential. I did a video on Corsair Gaming. Make sure you check that out. I still think Corsair Gaming can go the distance, and it became a meme stock. But as you guys can see, I made that video way before people were talking about it becoming a meme stock, So I still believe in Corsair Gaming. Microsoft is one of my biggest holdings, and we all know Microsoft is a great company. All know Microsoft is an awesome company. And Sonova is a solar power energy company. Sonova. So out of those, who is my biggest holding? Microsoft. Microsoft is running it up as my biggest holding right now. And then they got an ETF sector, and ETFs is 18% of my portfolio. And I have Cyber, which is a cybersecurity ETF. I have Fidelity Healthcare ETF. That's what FHLC is. I have Nerd, which is a gaming ETF. And then I have Super Dividends, which is global Super Dividends. It's a dividend ETF that's global, so I get some type of global exposure. And then I have SPHD, which is another dividend ETF, but it's a monthly paying dividend ETF, which I definitely love that. At first, when I first started, SPHD was one of the first companies I bought, and I was wholly sold on the fact that, monthly paying dividends, I could get monthly paying dividends from my monthly paying dividend ETF. You can, but if you find the perfect monthly paying dividend companies or the perfect dividend companies, you can get a way better return on your investment with just buying those companies, opposed to putting your money with an ETF who receives the dividend and then pays the overhead that they have, and then they issue the dividend back out to you. So you're paying a little more when you go with solely an ETF, but I still like it, and it's a way that if you don't know what stocks to pick, you can go with the ETF. So you can solely just invest in the ETF if you want dividend, and if you want to be heavy on dividends and be a dividend investor, investing in dividends is very, very Investing in dividends is very beneficial, And then TMFC, that's another of my first ETFs I bought, and that's the Motley Fool Index. So that's the Motley Fool's ETF. So you guys watch my channel, y'all know I like the Motley Fool, and the Motley Fool does, they know what they're doing. They're stock advisors. They got a whole program about stock advisors. So I'm pretty sure their ETF is on point. And then when we go to capital goods, right here it says capital goods, but these are companies that are industrial for real. Basically HECO and Northrop Grumman do the same thing. They repair and build jets and aerospace aircraft, and they also have satellites and all that good stuff. So yeah, if y'all see Northrop Grumman, I think Northrop Grumman, NOC is my biggest holding. NOC is my biggest holding, and I like it. I like it a lot, especially with the future, space travel, and people going up to space. They are one of the big names in that too. They're one of the ones that are already solidified and have satellites and things like that. You got companies like SpaceX and all those other ones that are new to the scene. But if the government wants to go into space, they're going to go with Northrop Grumman. And, that's why I really think they're pretty good. And I used to work for them, so yeah, they're good. Then consumer non-durables, you're talking about companies like Coca-Cola, Cisco. I got pretty solid holdings in there. Healthcare, CRISPR CRISPR. They're editing DNA and, you know, trying to cure cancer and things like that. They even got a super soldier serum. Look it up. They won a Nobel Peace Prize, and the lady said basically they can make super soldiers. They can make Captain America. They can make Captain America. Look it up. All I'm saying is look it up. That's what the lady said in the interview. After that, I had to have the company. Had to have. All right. And then transportation, of course, I got Delta and Southwest. I don't have much in those. Probably need to up that up. And then financial services, I have Prospect Capital, and that was a free stock, so I haven't, you know, invested into that myself for real. And I have TPGY, which is Pace Financial, and it's gonna be EV box. It's basically gonna be operating the electronic fueling station for the electric vehicles. They are already big across seas, and yeah, that's supposed to be a merger, and hopefully that stock, you know, does good for me. And then 6th Street, I got 6th Street. You guys should have seen last week I bought 6th Street in my weekly update video. You guys should have seen that. I bought 6th Street. All right, that's what TSLX is. So dang, I just ran through my whole portfolio, huh? I did, didn't I? And when it comes to this financial service, honestly, I would even consider Brookfield down there too. But hey, that's what they say. And you can even see your transactions. You can see your dividends that you had coming in, the dividends that you received. That's why Dividend Watch is dope. All the things dividends on Dividend Watch. But then we come down to the portfolio. You can see what companies I'm winning in. So I'm winning in a lot of my companies. So let's see what I'm losing in. ADT, that's a free stock. AYX, I'm losing it. AYX. Yeah, I hope it bounced back, but I've been losing a while in that. CRISPR, and CRSR. Of course, they're gaming. Growth stocks. They're down currently. But look at all this green. You can't talk to me about nothing. All that green. Nerd, which is my gaming ETF. I'm down, but not down by much. Omega Healthcare, down, but not down by much. And TPGY, EV box. The EV box stock. Down, but not down by much. Other than that, man, you gotta show me some love with all my green faces. I'm up in almost, I ain't gonna say almost all, because I'm down. But I'm up in a lot of my positions. Yep, up in a lot of my positions. So, what's the time? Let's check the time. 27 minutes. And I'm not gonna do a whole lot of editing to this video, so y'all got it straight raw. But y'all guys should know why. As I said, I'm gonna do a little bit more videos like this, and yeah, let me know what you guys think. I appreciate y'all checking me out, and that was my game winning portfolio update. Thanks for sticking with me. Come back and see me.